Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to today's webinar. It's Tuesday. It's a very unusual day to make a webinar session. However, as I mentioned a week ago, this Friday, March 3rd, is the national holiday here, so the office is not going to be working. Therefore, I had to pull my webinars just about a day earlier. So today's webinar is the first one for this week, and the last one for this week, and of course for this month's webinars, is going to be on Thursday at the same time. First of all, before we go into the session itself, before we actually discover what we will be talking about today, first of all, I need to remind you that those webinars that we were doing have been of course the webinars that we're doing so far are due to the fact that we have a demo contest with a price cash of 10,000 US dollars, which is divided among the first 6 top traders. Basically, I'm not going to go one more time over and over again of the cash price that we're dividing, the eligibility, and of course the rules of the contest itself, based on the fact that if you're interested to find out a little bit more about it, you can always go on our website, GDMFX.com. On company history, you will find everything you need to know about the contest. And of course, if you can't really find yourself in there, you can always ask our support department, because automatically a chat will open up from the bottom right corner, and you can ask any question, even if it's not about the contest. If it's for account opening or deposits, withdrawals, or any kind of other questions you might have, you can always go there, or you can always call us at our direct telephone lines. First of all, the contest itself have already begun a few weeks now into it. The deadline for sign-ups have already passed. It was on February 26th. At 2200 hours GMT. So far, it's 2 days past the registration. However, those that have registered at the last moment of the available time frame and have no idea what they're in for, you can always grasp information from those particular availabilities, like the chat, the telephone lines, our email addresses, or anything that you might find useful on our website. And of course, you can always ask your questions at on an email at webinars@gdmfx.com. This is also monitored daily by our support department, and questions that you might have that you have forwarded over there would be answered as soon as possible. So enough with the contest. Right now I want to focus on the topic at hand that we have today. We're going to be talking about price action based trading systems. Part 1 is today. The second part will be on Thursday. I have divided on 2 different parts based on the fact that we have more than one trading system to present to you, ladies and gentlemen. The first one today is a very easy, very neat, extremely conservative system. Involves little risk on the financial markets, and of course, based on the fact that I've received some requests from our participants here, traders that are attending the webinars, they have asked me to present some of my systems on different instruments. My focus was so far on mostly on the euro versus the dollar pair, as this is one of the most traded instruments out there. So The fact that I'm focusing on it is basically because most of our traders are focusing on the majors and major commodities as well. So I'm skipping the exotics based on the fact that the spread is a little bit higher over there, as well as the overnight rates as well. So I'm trying to focus on something that can give us as much profit as possible. That doesn't mean that systems are not working on every pair or time frame as specified into the individual webinars. Right now, we're going to be talking about a system that focuses on 3 different indicators on our trading charts. But before I do that, I need to remind to our traders right now what the definition of a price action, a trading analysis, or a trading system could be, as usually traders, we're talking about experienced traders, professional traders, professional market traders that focus on price action trading. Usually they don't use any kind of technical instruments like moving averages or Bollinger Bands or any kind of indicators that can give you further instructions on what the market is up to. However, I have found a very unique way to implement price action trading for unexperienced traders or those that are coming on the market right now with little or no knowledge at all. Therefore, I need to remind those traders, or at least let you know, what price action trading really is. The so-called price action analysis to trade the financial markets is to learn to read the charts and price action movements on those charts. As you can see it in front of you, we're looking at a gold 15-minute time frame chart where professional traders usually use trend lines, channels, and support, resistance, and pivot point levels to monitor the market, and of course make their decisions on basis of technical candlesticks like those that you see in front of you, and of course the price action that forms after a particular pattern or candlestick formation. Also, of course, using trend lines, support, resistance, and pivot point levels, we can also pinpoint a particular a trading environment which could be healthy for us to enter. Now, all economic variables, however, created by price movement, which can be easily seen on market's price chart from a professional trader's point of view, like myself and others participants on this webinar as well, is with little need or no need at all to use any other instruments, trading indicators, to analyze the current market environment so they can easily make their profits. However, it is humane, of course, and it's in every individual's head, let's put it this way, that uncertain times could come, and sometimes a bare chart, or let's call a raw chart, is simply not enough to make that particular analysis. Now, as we see the chart in front of us right now, gold chart, 15-minute time frame, we see that we have had a range of gold price which has been sidelining for some time. A false breakout occurs, but the support level here have been holding for some time, and of course we can see that same bounce off. The resistance level over here, however, has been preventing the gold price to climb even further, but a professional trader would see that mostly the price action could establish a bullish overview, of the market. Therefore, the focus of the professional trader would be to look for a breakout above these resistance levels. However, such a breakout does not occur. Therefore, that current professional trader would be looking for a breakout to the downside of that range to make his or her move on the market and, of course, profit from this price action move. But if, for example, we are unexperienced traders and a raw chart is simply not enough for us, we always have other options. As many different articles on the web can tell you little about indicators and combination of more than one that can ease your pain during the trading, and on top of all give you some certainty about market direction and for how long, of course, the market will go. I have developed a way to spot certain market conditions, filter most of the negative ways in negative breakouts or negative moves of the market, which could dent or damage further way our trading balance in our account. Today we will look at such a trading system that could provide you with further opportunities. The fact that the system has been developed to be much more conservative than looking at a raw chart, which could ultimately allow you to make trades like this one. Now we're looking at the gold chart one more time. This is about $10 to $11 move on the market, which on one lot traded, only one lot could give you roughly around $1,000 of profit in single position. Now, how to find whether this condition would be healthy enough for a basic trader or such that have little or no knowledge of market conditions to trade the market environment? Well, it's very simple. What I'm using is one of the most important moving averages, and this is a exponential method of the moving average, which is with a period of 200. One of the a must-have moving averages on your charts when you're using indicators. The other simple technical indicator, this is Bollinger Bands. As you can see, it's been preset to period of 14 with deviation of 2, and I have made a style to have a yellow color resemblance because of my background, and this would make my trading a little bit more easy. Now, how do we use that system? We will find out further down the road. However, those are not exactly the indicators that we're mostly going to use. And those are some indications of what we need to do, but not the whole picture. Now, we need 3 more, which are fundamental to our technical price action analysis. One of it is an oscillator, which we are already very familiar with it. It's called relative strength index. The relative strength index in this case that I'm going to use is with a period of 34. Application, of course, stands to close. However, I have to first of all change the levels of this one, and I'm going to go for 70 plus another one that goes for 30, and I'm going to add a level of 50 is a middle level, which is not really important to those levels, but we still need to know where the market is at these current conditions. Now, a period of 34 makes it kind of an intermediate type of trading environment. As you can see here with a standalone indicator, when it's on overbought conditions at the level of 70, we can see an immediate turnaround to the downside. But we're not using this indicator as a standalone market tool. What we're going to use On top of it, of course, this would be the average directional movement index, which we are fully familiar with so far. So what I do is I go to my navigator bar, I find the tool that I need, average directional movement index, or the abbreviation is the ADX, which we have been using for so long so far. And of course, so I just drag it and drop it on top of my chart with, of course, levels of 80 and 20, with, of course, a little need to add the 50 level because it's actually going to go on top of this one. And this is pretty much what we see. However, to make our charts much easier, what we usually do here is we take the color of our background, we just copy it, Control+C, we go on the ADX here, and we just hide the colors of our positive and negative directional movement indexes because we don't really need them. And what we see is a much simpler chart. A chart that gives us two indices, two absolutely simple tools to use, the ADX line and the relative strength index. From both, of course, it's very quick to notice that what we need here is the crossover of these tools. Of course, you can thicken them out if you don't believe that it could be useful to you. You don't see it that well. You can just go ahead, thicken those lines a bit, and you can see it. It's just sharpening these crossovers that we're going to be needing from now on. Now, furthermore, our final tool, what we need right now to use on our charts, is the MACD, or the so-called moving average convergence divergence, and these will be the default settings. I've been using other settings here for some of my other presentations. This is what we have, the default settings of the MACD, and we need the default settings only as a confirmation at where the histogram is at any point in time, whether it's below zero or above zero. And the logic says above zero it's a bullish trend, below zero it's a bearish trend. So after we have all of our necessity tools right now that we're going to use during our trading experience, our price action, technical analysis, now we need to start backtracking what we have so far. Rule number one, we need to have a crossover. Okay, after this crossover, what we need to look for is for the direction of the volatility or the ADX. It always needs to point upwards. It doesn't matter which direction our relative strength index points. Now, our relative strength index is also a volatility indicator, but above all, it enters much quicker into oversold and overbought conditions. Therefore, particular crossovers are occurring during our trading experience. Now, we're going to talk about these points down the road for each and one of it. We here see that the ADX is pointing up. Our crossover here, this is the first crossover we see before we look at these next two ones. Okay, one thing here is very important to note, where your histogram is at the point of a crossover. Okay, we see that the market is going to turn to the downside because the relative strength index is turning negative. Our ADX is pointing up. That means the volatility at this moment is still high, and this is what we need. However, our histogram here is still above the zero level. It's becoming negative down here. It's way after these crossovers, another move of the ADX going up and the move of the relative strength index going down. But the one rule we should not make little of it above all, it should be the absolute must to remember here is that if the price action or the current price is close to the 200 exponential moving average and our 14 exponential moving average is against the odds that these technical indicators are suggesting, we should avoid trading. Of course, in a lot of trades, we will see how the price action is making a move towards the suggested direction of the technical indicators below. However, these are $4, which of course on one lot is $400 for about 5 sessions. This is a 15-minute chart time frame, so this is 1 hour and 15 minutes for you to make a pretty good profit considering the fact that you're trading price action. Now, on a smaller time frame. However, this is only one case where the price action continues below the 200, and this is because of the volatility strength. But there are going to be cases, ladies and gentlemen, where the price is so close at the 200 exponential, which is actually on a low volatility, is going to bounce back up to the reverse direction, and of course that would cost us dollars out of our accounts, and this is not what we want. Now, after we know how to protect our accounts, after we know the rules of engagement of the system, we need to see what are the possibilities, what are the profits, what we can achieve by using these conditions. Now, let's start from here. First of all, sorry about that, let me just click here on the top. I'm just preventing my chart sliding even further down the road. Now, a crossover here occurs on these two indicators. Now, this is the first thing that we need to notice. The crossover, it doesn't matter in which direction the relative strength index is. Of course, if the market is moving up, the relative strength index will be moving up as well. But looking at the ADX, if the market is moving strongly up or strongly down, it will always point to the upside. So our ADX, one more time, as a rule, it always needs to point up for a strong market volatility. Relative strength index is showing us market direction, current, short term. And we need to verify our histogram whether it's above the zero level, and at this point on, it is. And as I mentioned earlier, a market trader which does not, who does not need particular indicators which we are implementing in this chart could actually see that his move would be here, his exit would be over here on the next strong bearish candle. Let's be conservative. This could be our exit. This is $8. Now, $8 in 7 sessions, that is less than 2 hours. 1 hour, 45 minutes, we have a profit of about $800 on a single lot. The idea here is that this is the conservative way of trading. Now, if you're more aggressive, we can see that the histogram is still above our zero level. Your exit then should be on the next crossover over here, which is relatively higher in this case, but there will be cases where it's going to be even lower. The fact that the trend keeps going higher, we can verify from our next crossovers here, multiple crossovers. This would be my entry, as there is a downturn here. Again, bounce off. My histogram is still pointing to the upside. I see that the expansion of the Bollinger Bands are in favor of my trend. So my entry here would give me another profit of roughly $7. Let's say $6 with the spread, which gives us another $600 in about 27 sessions. This is just over a day of trading. And again, we can see that volatility is dropping, the market direction is dropping until a point where it halts. This is the current volatility, and we have a sideways direction. So the ADX is very useful, ladies and gentlemen, when it says the moment is right. This is why we need that 50 level. Usually above the 50 level of the ADX or above the 20, depending on the system, because I've been using a system with these two indicators, with the MACD and some moving averages on a counter trend trading system. This is mostly a scalper system. You can find it in our webinars, our past webinars. It will be probably difficult for you to do so because there are thousands of different systems. So if you are struggling to find any kind of system, just ask me which one. I'll find it in our system, and of course I'll give you a direct link to see it. Now, as we see, the market keeps going higher, but my entries, as I mentioned earlier, are kind of limited. Now I can see that crossover, but immediately afterwards I see another one that tells me if I've made a wrong decision to enter here on the top of the trend, I could exit with a very small loss, and that's only $1.3. So you see, having a profit of roughly $800 and then another $600 and then losing a trade with $130, that is a relatively good trade. Comparing to the fact that if we start moving backwards, we will see numerous cases where market crossovers like this one. As I said, this crossover doesn't tell you the market direction. Market direction is told by the histogram here, but of course we need to see the direction of our Bollinger Bands. If the direction is to the downside and immediately afterwards we see a contraction, even if we've entered somewhere here, okay, even if we enter somewhere here, this is $1.50 of a possible trade. However, on the next crossover and on the next move to the other direction of our Bollinger Bands, if you have lost the possibility of exiting right here when the Bollinger Bands have been contracted here, which is a relatively flat trade, you can always do it here. It's not a problem. It's about $4. You can always count on the system to give you further profits down the road. Now, the fact that this is a price action system, you need to fully understand the conditions under you are using this system. Now, if it's a swing trade on a sideways direction, your Bollinger Bands will be contracting like this one here. Now, if it's a bullish trade like this one, you don't have to take the absolute bottom here. You can wait for the price to break above here and take it over there. So this is another roughly $400 of profit because of the crossover, because of the histogram telling you direction Bollinger Bands is also expanding, and the price action have moved above the 200 exponential, which is our particular way of trading. Best case scenario, of course, we will have a slowly developing downward trend where we have our crossover just an hour previous to the histogram that's moving below zero. Price action is going below the 200 exponential moving average, and we have a profit of roughly $260, which of course could be also combined with a trade from here to here with another roughly $400 of trade, simply because the crossover that occurs here, as you can see, gives us another trade because of the histogram still remaining downwards, telling us the pressure of the market is still downwards, because the volume that you have and the volatility, strength, market direction, plus support and resistance levels is everything a price action trader needs to absolutely profit from the market. Now let's have another look at another trade here. Now the market is way off the 200 exponential moving average on that crossover here, telling us volatility is dropping, which one of our conditions is not met. Therefore, despite the fact that the price is away and there is a possible trade here for 360 USD at this case on one lot traded, even if the histogram is telling us the market is going to go down, our entry should occur here. After this one has been broken, from here down here, we have another $300. But this is because we have filtered this possible negative move, because there is going to be a way from where this bounce off could occur. You see, the market going down here, bouncing off the 200 exponential, Bollinger Band starts contracting, and the market reverses direction. Therefore, you should not be angry if you lose a particular trade like this, or like this one here, because if the conditions are not met and you have little experience to know when exactly to exit the market, you have to rely on the facts that are provided by the combination of your technical indicators. Of course, there are cases when around fundamentals, major fundamentals like the GDP, we're waiting in about an hour time from the US. In cases such as these, we can always see most of the technical systems failing. Of course, there are those that I have presented before, even more conservative, that could give you more profits and protect you, of course, from fundamentals which are uncertain given point of time, because when market expectations start pricing into the technical chart, everything becomes a technical trade. But when we have some major announcements that were away from any expectation, there are systems, technicals that could provide further security. We can see here the same case scenario. We have the histogram moving above the zero level, our crossover, the volatility is still high. We have the price action moved above the 200 exponential moving average, and this resistance level here is very easily broken, giving us rough profits of $250 if you have let it to run. This is another roughly $600 of profit. Therefore, the system is extremely reliable. However, it could take some time for you guys to let's say get used to it, to know what it's doing and when. You see the sharp move, the expansion of the Bollinger Bands. It doesn't matter if you lost this trade here. You don't need that trade. You need this trade. Okay, this is $500 after the crossover, the expansion of the Bollinger Bands, price action below the 200 exponential. We see the direction of the other exponential moving average. The histogram is pointing to the downside, and of course, 2 sessions giving us $500 in half an hour. Another trade is presented here. These are also also conditions under which we could trade. Our histogram is in negative territory, the crossover, the volatility starts rising, market direction is pointing down, and from here we have $880 or roughly $900 of profit, depending on where exactly your entry is. So you see, combination of these could provide very useful to any newbie price action trader. And for me personally, trading on price action could be the most profitable trade. And of course, relying on too many technical indicators could cause problems to your account balance. So in any case, what we provide here at GDM could always prove useful to your trading plan. Well, that's all about the system. At the end of the webinar today, of course, I could only say that one thing that we cannot do is give you a trading advice. I can see that some of you guys have already been telling me which direction of the market you have already taken. To be absolutely honest with you, in this case, conditions are met, of course, for bullish direction. I would, of course, wait for this resistance area to be confirmed, and when the next candlestick opens above here, and then, of course, we could take our action. And the way I see it, with a possible 200 to possible 300 to 400 US dollars of profit in the near term. However, given the fact that the next 55 minutes would prove crucial to any major trading pairs and commodities, basically because we're waiting the US GDP report to come out. I told you already, whatever trading system you're using, which is based on technical indicators, could actually show flaws during times of high volatility and fundamental uncertainty. So this is always a reminder that you should take precautions and wait for a report to be released to see what the market is suggesting, check on your technical indicators, and then start placing your orders. This is what a fundamental or technical and above all a professional trader would do. Well, that's all about it for today. I have to go and, of course, start placing my my trades to consider which direction the market is going to go according to my trading systems, of course. And whatever questions you have, I mentioned at the beginning, you can always go to our website, gdmfx.com. You can see on the bottom right corner a pop-up chat where all of your questions would be answered from our support department. Our telephone lines are always available for you as well. And at webinar@gdmfx.com, we can always answer your questions also on an email. That's all about it for today. I'm going to meet you again this week on Thursday, same time. Again, we're going to be talking about price action-based trading systems, and this will be part 2. See you then. Thank you for joining us. Bye-bye.